Email query coming in now. Nishit says that he lives in his parents' home. He recently bought a house in the same city against a home loan. Now this home is ready to move in. He plans to rent it out. What will the tax impact be? How much of the interest on the home loan will he be able to reduce from his total income? I think, Pannkaj, you'll have some good news for him. I can see you smiling over there.
Yes. See, I think this again is a very interesting thing, because most people, particularly salaried people, they do this, and this is very much feasible. You already have a home, I mean, you're getting possession of that house, you have a loan against that, and you want to rent out the house. That's the best thing possible that you can do, because from the rent income, you are supposed to get certain deductions. Now, let me explain to you. I'll take 2 minutes to explain this, Kavita. First, you take the rent amount. Let's assume that your rent is 10,000 rupees. What is deductible out of that is the municipal taxes. Let's say out of 10,000, that's your annual rent. Your municipal taxes, say, are 1,000 rupees. So, you have 9,000 rupees as the balance. From that 9,000 rupees, you are entitled to a deduction of 30%, which is a statutory deduction. So, you have 2,700 as a deduction, which is going from there. So, what is left is 6,300. 6,300 is your balance. Now, if there is nothing, if there was no interest, nothing, then 6,300 would have been added to your income. Now, if you have paid interest, if you have a home loan, or if you have any other loan from a financial institution and you have paid interest on that, then that interest is deductible. And if you are if you rented out the house, then the whole of the interest is allowed to be deducted. So, let's assume that against this you have 50,000 rupees as interest. So, 6,300 minus 50,000 rupees, that means you have a loss of 43,700 rupees as the coming under this head. And this loss can be set off against your salary income or any other income that you have, so that you save tax on that. And had this been self-occupied, supposing instead of letting it out, if you had yourself used this house, then your interest deduction would have been restricted to 2 lakhs. So, instead of 50,000 here, supposing if I give an example where your interest is 5 lakhs of rupees, then you'll be able to actually see what is the kind of benefit. So, you claim interest, entire amount of interest that you're paying for the home loan would be deducted against the rental income that you earn.
Right. Pannkaj, I have a question to add to Nishit's question. Now, a lot of people also claim HRA. Can you do both? Can you claim HRA and can you claim exemption, basis the rent that you're receiving on the second home?
If your job is in the same place and your house is also in the same city.
Say if it's in 2 different cities, say I have a home here and I'd move out, say, to Delhi because of work purposes, and I'm claiming HRA because I'm living in Delhi and I have a home over here that I've given on rent.
Then you can claim the deduction.
So you can actually claim
for HRA
both,
as well as for this.
Right. So, like as you can see, from the tax perspective, from the tax point of view, it is actually very, very prudent to invest in a second home and to give it out on rent. You actually save a whole lot of amount on your income tax that way.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricks.